So to reiterate, when we're considering narrative, what we're asking ourselves is why the market's moving up or down to specific areas of interest. So we're asking ourselves what the objective is. Are we trading down to mitigate something, or are we trading away from somewhere and the objective's been completed? Now, I want to preface this module really by saying that the purpose of all of this analysis, whether we're looking at market structure or narrative or whatever comes after, the whole point of it is to make clear decision-making objectives, right? We're able to make more consistent strategical decisions in the market over our career. So let's not be silly, because if we zoom out far enough, you'll notice that the market is just bullish, but that doesn't help us at all. When we consider the higher time frame, depending on what time frame you take your entries on, you might look at the 4-hour or the daily as your higher time frame movement. And if you zoom out to the monthly or the yearly or something like that, you'll notice that the market just basically goes straight up, and that doesn't help us at all. But you can see that there's different structure that forms on the daily chart. For example, this movement is actually creating swings as it trades down, and you'll notice whereabouts this goes to, right? Right inside this prior swing that then delivered this movement up. So when we're looking at objectives in a bullish market on the higher time frame, we're essentially saying the market is either trading back down into this zone on the higher time frame. That's the objective of this pullback. And now we're determining when that pullback is occurring, right? We get valid highs in here, but it's the defense and then the break of structure that now tells us that our objective is to trade back into this prior zone. And now we're looking for a break of structure, ideally, to now start looking for longs. And the objective of this low, our expectation, unless this breaks structure, this objective is to trade above this high. And now we're looking to see how this is going to be delivered. The first thing we need is a break of structure, right? We were trading bearish. We had protected highs in here. This one got broken here. And we can see a very different bit of price action as this movement trades up to here, right? This created a swing and then was immediately shoved down. This traded sideways. The movement up, back into the prior swing, then was met with more selling until we achieved this objective. That movement then had to first break structure. We then trade back down to where? The midpoint of the prior zone. So we find failure, which we're going to go over in depth in this module. So failure here now takes us lower to our next objective, right? So order flow here is bearish, even though our higher time frame structure is bullish. And we'll go into order flow quite a bit in this module as well, right? Because order flow is really lower time frame structure that's now being broken, which facilitates the movements down. And then we break order flow, and ideally that sends us up. And now we can start looking already at how we forecast the objective of this low on a higher time frame to break this high. We can now start forecasting how we expect that to happen. The break of structure, the objective to now trade back into that prior swing, now mitigating it, leaving, trading back up to our SNDRs, which we learned about, right? We then create a higher time frame SNDR here. The purpose of creating that is to break this high. And all of this, right from here, when this was determined to trade back into this zone, all this price action was facilitated exactly as it needed to in order to break this high. Now, for our analysis here, we're actually going to look at this movement back down. So we've broken this high, and from a higher time frame, we're looking for this failure. We don't know whereabouts this is going to be on this leg. It could be up here. But regardless, we're looking for, at some point, this should trade back into the SNDR. Now, this area is a valid area to look for longs. And if that area validates, we're expecting to break this high, right? Otherwise, we're looking to break structure, and then we'd eventually trade all the way back down, maybe liquidating something in here, etc. Right? So we start forecasting, or at least analyzing objectives based off of how these areas of structure react. So they go hand in hand with each other. So our first area of interest is this SNDR here. And you'll notice the midpoint of it gets mitigated. We have our double bottom and away we go. So what we're going to focus on for the next little while is we're going to look at the short-term narrative, which we're able to take trades from within the higher time frame narrative's context. We're going to look at failure, why that occurs, why that needs to occur. And you'll usually see, not always, you'll have these double bottoms, which are ideal, obviously, because that's a very clear sign of failure, which is now reversing the trend. But what you'll often find is these higher time frame areas that then launch, you get that attempt from the higher time frame to reverse the trend. So you might have your internal structure doing this. Your higher time frame narrative is we need that higher time frame reversal to now mitigate. And then if that fails, now we continue higher to potentially break structure higher, right? And you'll notice all of these had an attempt to sell off that failed before sending price higher. So let's hop into the 15-minute chart. We'll look at what went on in here that facilitated this movement above this high. And we'll look at some short-term narrative examples and how to get involved in this movement, what we're looking for, and how to profit off of both sides. So zooming down on our 15-minute chart, we notice a few different things. Number one is that we're inside of our area of interest, so we're looking for longs. We're not looking for longs above it, inside of here. And you can see the movements did not give us any sort of semblance of a major rally, right? We're looking for objectives to be hit, and then we're looking for decisions to make for either the retracement or a reversal itself. So a good place to start is looking at inside of our area of interest, our 15-minute time frame. We want to look for a valid low being formed. So we noticed that we had a bull bar here, but this bar was not structural. So we don't have a valid low formed there at all. We finally validate here. And you'll notice that that actually led to a strong reversal where we're trading back down to mitigate this area of interest, right? We trade higher, we trade back in, we trade higher, we trade back in, and we go. And I wanted to introduce the concept of order flow really in this module, as it's an aggressive way for us to determine, using lower time frame structure, what this current time frame wants to do. And what I mean by that is if you look at this movement up here, clearly we're in a higher time frame move. There's no structure that's formed on the 15-minute time frame. Our higher time frame expectation is that we have the attempt to reverse down, which eventually happens here, and you see there's a nice double bottom. But if that's going to happen, usually we will have some sort of movement up, which is then left with a change in order flow, which then sends us down. So if we look at this movement here, this high's job in a bullish trend, again, is to mitigate lower so that we can finish our retracement higher in order to go lower later on, or vice versa if we're looking at a short retracement where you have this movement that eventually is going to put in some sort of failure, change in order flow, and now we can finally go higher. So here, when we're looking at order flow, we want to take the predominant low or high of the move. In this case, we're looking at this here. And you'll notice that this actually didn't make a valid high in this movement. We finally get our valid high here, which begins the process of trading back down to this area that broke above order flow here. Now, this change in order flow then trades back in. You'll notice it trades back into this swing, and we get failure. That failure, that internal failure, is a major sign of going heavily short, right? We want to look at internal failures, whether it's a double top or bottom, whether it's a change in order flow, which then mitigates and continues on its way. Those two areas are what we're looking for. Now, this is a break in structure on a lower time frame. After we put in a valid high, we break order flow, we trade back up to the prior zone, and then we continue lower. And this didn't put in a valid low here. We traded sideways, finally delivering down, creating a valid low in here, trading higher, trading back in, and then leaving. You'll notice this actually put in a valid high in this movement, and that's where the change in order flow comes in. We've achieved our objective of trading back down to here, and now we're going higher. Again, at these movements, we're looking at this being a higher time frame. Why? Because we have one directional price movement. There's very little to no attempts to reverse the trend, and we're certainly not creating any swings. That's very different in this movement here. We create a valid high in here. We then create a valid low, which then breaks structure. We now have an internal bearish trend going on, where we got protected highs, valid lows, protected highs, breaking these lows, right? That's a bearish trend by definition. These are also trading back into the prior swing. We find failure, we leave. We trade back into the prior swing. This barely traded into it, and then we leave. And you'll notice that we actually built a range here. This accumulation, creating liquidity underneath without taking it, snapping down, and you see a very clean manipulation leg. That's why we're using this high from the order flow movement here, not the protected high. As you'll see, this isn't actually a break in structure. If this was a protected high, then we're looking at a break in structure if we trade and close above it. We didn't get that here. And that's also an important distinction to note too, because while we're learning about structure and narrative, what we're essentially trying to determine is what is the market doing, why is it doing it, and what's it attempting to do. And that gives us structural and non-structural swings, where we're looking at attempts for the market to reverse a trend. And structural swings are ones that we risk off of because they're creating protected highs, which we don't expect to trade above, or break, I should say. But non-structural swings are attempts for the market to reverse the trend without creating swings. For example, this here. Now that actually did create a valid low in here, which then made a protected high, or at least attempted to. We then failed underneath. But you can see 1, 2, and then finally a third attempt to break this trend, finally resulting in a movement back up, right? This movement, we had a high, first attempt to reverse, second attempt to reverse, third attempt to reverse, creating a range. We then broke below and immediately reversed out, right? So this was the fourth attempt to reverse the trend that actually broke order flow, leading to that higher time frame move. Now, one important thing to note as well is that we're looking at this and we're going, well, why don't we have a bullish trend here where we're expecting this to happen? And that is kind of our intro to multi-time frame analysis, where we're looking at this bearish movement, and until we get that change in order flow and then a break in structure, our expectation is that this movement will eventually have an attempt to continue this higher time frame bearish trend. Now, we got failure here, which then really sends the market up. But you'll notice in this movement, right, we actually didn't break the intermediate trend going on here, right, until we finally snapped below it here. This didn't even take the liquidity there, and yet we still went lower. And that's because the higher time frame needed to finalize what was going on here. We barely tapped into the midpoint of this zone, that higher time frame zone that we marked earlier, and we finally went on a rocket ship based off of the higher time frame. So the internal structure gives us a lot of cause to understand what price is doing and how it's facilitating the higher time frame order flow. But one important thing to note is that this valid high that was finally formed here, we traded lower, we had our movement up, this low failed to put it in a new high. Our expectation is lower prices, right? And we knew that here. We actually had a valid low formed here, and then we broke below it. So it's the exact same thing that we saw over here, except over here. So this low then put in a retracement to where? The prior zone. Shorting opportunity that came in here, traded lower. This isn't a structural swing, this one here, right? We had to have a body closure above this candle. We didn't have that. We traded back into this area again, and then we were met with lower prices. But we didn't break order flow at all. We had this high. We had this intermediate high. We then had this intermediate high. We then had this intermediate high, and so on and so forth, not once breaking order flow that sent price lower. Very different than what happened over here, where we broke order flow, traded back in, we were expecting higher prices. We didn't have any such luck in this movement here. Now, it's important to note as well that this movement, after we failed here, we don't need to be in here necessarily. Similarly, we don't need to be in down here. What we do need to do is have a very high likelihood of success. We don't need to be early, but we do need to be right. So in both of these instances, we created a valid 15-minute low, and we can start looking for longs, understanding that price is now telling us it wants to retrace higher or reverse entirely, in this case, after the higher time frame double bottom. We created a valid low here, we traded back into the area that did that, and we went on a rocket ship. You'll notice as well, this happened right at the New York Open, which it tends to do. So we created a valid high in here, barely trading underneath this area and continuing higher. These retracements were all long opportunities for that day. Now our higher time frame expectation, again, is to trade back into where? To this manipulation leg. Similarly to what happened here, trading back into this area, we're now expecting to trade back in to here, and you'll notice we did. This movement, if we mark out this manipulation leg, the midpoint of that provided an extremely strong opportunity in here as well, validating this as a low, trading back in, and continuing higher. The last thing to note in this section is we touched briefly on our expectation of this high, trading back into this prior swing, and then leaving, and why we would have expected at least a higher time frame retracement down to take out this liquidity. This movement actually did trade into the midpoint of this prior zone, about here. And you'll notice that it actually delivered a decent movement up. However, other areas that you might have learned market structure from, we'll talk about things called fake flips, or they'll talk about unavoidable losses where something's just going to be wrong eventually. And I think that's because they're not really able to take or teach multi-time frame structure into account, where we're expecting this movement to put in an attempt to continue this higher time frame trend. And that failure is now us on the higher time frame looking for that higher time frame blast, and which we eventually got. So it's important to understand that Module 3 and multi-time frame analysis is going to tie everything together. But for right now, what we're looking at is that the higher time frame has to finish its objectives. Similarly, that the lower time frame here has to finalize its objective to then trade higher. What we're looking at, again, is we've got a higher time frame area of interest, right? We're looking at taking longs after we're inside of that area, right? Not before. And we need a signal created by ideally forming valid highs and lows on your 15-minute time frame. You're then looking for longs. Change in order flow will tell you it's time to look for retracements back down. Change in order flow then trades higher. And these order flow movements inside of structure will allow us to have very low risk, very high probability entries as long as we understand what side of this trend that we're on.